Hello guys, I'm Amir. I hope you're all doing well. And today we are going to talk about investing versus speculating, or I should say pure speculating. Now one thing I want you to know is that the videos that I'm uploading, especially not the course related ones, I'm not uploading them just for the sake of uploading. No, although these are mostly common sense topics that are not earth-shattering and complicated concepts, but, sadly, as we all know, common sense is not common practice. So I hope you guys can avoid these misconceptions and, mostly wrong beliefs, and as a result, become a better investor. Now, many seem to believe investing, especially when it comes to the stock market, is that the stock market is a giant casino. Investing in general is risky. Cash is safe. Well, if you have seen any of my previous videos, I'm sure you already know that cash is nowhere near as safe as you might think, given especially what is happening in terms of inflation internationally. Now, the reason many people have come to believe the stock market is a casino is simply that most people know nothing about it at all, or incredibly little. I'm sure you have heard things like 80 or 90% of investors lose money, which is not entirely true. But even if it is true, that 90% or whatever the percentage is, the failure rate, in my opinion, is true for any field if the person doing it is not educated enough. They are just speculating. Like I said before, just because it is easy to get started, again, thanks to the technology, it doesn't mean investing itself is easy. I've honestly lost count of the number of people I've met over the years who regularly buy and sell shares without understanding almost any of the things that you should know before investing in the stock market. They bought the shares based on rumors or after doing a 2-week course. I mean, would you trust a doctor or a mechanic that have done a 2-week course? Or any other profession? Why people believe that when it comes to investing, I really don't know. Sure, you might get lucky without knowing all that is necessary about investing and make money for a while, which could be the worst thing that can happen to you when you first start investing, because, then you're building the whole foundation based on a lie. And as a result of that lie, which is pure luck, I've seen people selling their house or other things that they have worked really hard to get in the first place. And then one day the house of cards collapses. So relying on pure luck over the long term and succeeding, very unlikely. And, maybe it is not a bad place to mention the importance of some of the concepts relating to investing in general. Because, I get asked these questions a lot, like, should I really know micro or macroeconomics? Should I understand quantitative concepts, statistics, probability, and some other sections like financial statements? And, my answer to all those questions is a resounding yes. I mean, I understand where does these questions come from. They have mostly seen an ad or heard someone telling them about a course where if you learn this indicator or that technical pattern or price action, then you're all set. And that is the difference between investing and pure speculation. I say pure again because on some level you are speculating anyway. You can't predict the future, but when you're investing, analysis and research is a key part of the investing process. It involves evaluating different assets, sectors, and patterns or trends that occur in the market, which must result in buying something that has a high probability of success. Again, I say probability because you can never be sure, but at least the probability of success is quite high. And to be able to determine that, you need to understand quantitative concepts. Speculators, on the other hand, are trying to make unusually high returns from, essentially bets that can go one way or the other, right? So the main difference between speculating and investing is the amount of risk and research involved. What we are doing here on this channel is investing. Look, learning about investing can be fun too. At least it was for me. I mean, the first time I heard that if there is a company that I like and I'm using their products, my friends are using their products, like, I don't know, like Google, Microsoft, or Coca-Cola, Apple, or a company that I believe in, like Tesla, I can own a small piece of that company by owning some of their shares. That was awesome to me. I guess what I'm trying to say in this somewhat short video is that at the very least, please understand what you invest in by making an effort to learn about the company, what they do, how do they make money, are they making money at all, how are they going to make money in the future. In other words, companies with good, strong balance sheet. And then finally, obviously, diversify, because, there is always a chance that you might be wrong. So bottom line, if you want to be in this space and be successful long term, knowing about the company is obviously half of it. The other half would be the overall economy on the micro and macro level, and also understanding price action, technical analysis, so you can find a good bargain, combined with the proper tools, obviously. In case you feel like you're not interested enough, or you do not have enough time to educate yourself and are satisfied with a certain but obviously lower level of profitability over the long term, then make sure to see the next videos where I talk about index funds and ETFs. So good luck, and as always, understand what you invest in. See you soon.